Hey, what's going on, guys? This is Terrence Ray back at you with a weekly stock market update. This week, should see some fireworks this week in the market. At least, that's what the volatility guys are trying to tell us. So, what I have up right now on the screen is a chart of the VIX. The VIX is the volatility measures the volatility of the SPX. Basically, some people say fear in the market, um, or something like that. I don't really like to say fear in the market. I just think it just tells you, you know what the word volatile means or volatility. You know, where usually we might just have like a stair step up in the market, right? Just normal. Well, right now the market is pricing in some volatility, right? So a lot of erratic movement. Doesn't tell you which way, but generally, if the VIX is high, that means that the overall market or the S&P 500 should be going down. Now, on the screen, why I have a chart of the VIX, it's very hard to chart because you get stuff like this, right? Wicks like this. Then they may tell you that may not be accurate for one day and this, that, and the third. But so keep all that in mind. But I do like if I seen this setup on any other chart, no matter what the ticker symbol was, to me, when you have this big move, like you had this big green candle, right? This was on what Thursday? No, I'm sorry. That may have been Monday. It was the third. So September 3rd would have been Monday. Or Tuesday, excuse me, because we had the holiday on Monday. So Tuesday, right? Gap open higher, big green candle. Then you get these two kind of like fallbacks. And then on Friday, look what you get. You got a hammer candle. So and this high took out this high. So at this point, if this was a regular ticker symbol, I'd be like, man, that's a bullish setup, right? Because I got a high, then a low, then a higher high, right? So I'm expecting to see another big green candle like this, right? So with that being said, now that doesn't necessarily mean um, because a lot of people don't. I don't recommend if you're not familiar, you don't have a large account or you don't know what you're doing to be short in stocks. You can um, trade volatility by selling options, right? Selling options and getting some theta in your account. Maybe you have a small account doing iron condors, and I'll show some examples of some things that are possible to do, right? Or, maybe even selling call spreads. That's a way of getting short and then not having to risk, like maybe selling naked calls. Maybe you're not familiar with that. Excuse me. So, with the VIX looking like that, let's go take a look at the SPX and we'll talk about the expected move for the week. Now, the expected move for the week, let's hide these. This is, yeah. The expected move for the week is 115. That's real high. That that I want to say. I remember maybe recently us having one maybe around like 120 or 128. So this may be like the second highest expected move, weekly expected move that we've had possibly in like maybe this year. I'm not 100% sure. We don't see that on a regular basis. Now that just shows you that the market is expecting us to have a big move, and that could go either way. Boom to the downside or up. Either way, it doesn't tell us the direction. It's just telling us like, hey, get ready for some whipsaw action. Now I've been um, relatively bullish, to be honest with you. If you remember the past couple of videos, I've had levels to the upside. Um, this week, I think like Meta may have hit one because I did trade Meta through the week, but I mean, it rolled right over. It didn't go past, like you can see it hit this level and then that was it. Like it, boom, boom. and it hit here, and then that was it. Like it never got to any of the other levels, then rolled over. I think FSLR got up to this one, as you can see, the 1618, and then that was it. And it has turned over. Now it hasn't taken out the A of the move, but it is kind of tough to sit through that much of a down move, especially if you're you can see where it wicked right there. If you're like trading naked stock, like if you're trading stock, right? Then you pretty much gave up what you made, or that's hard to sit through. Now, I'm not sitting through it. So it's one of them things where that's one of like when you get long. So let's say we have a call spread on. This is why I'll look at like 50%. So it doesn't matter which direction. Let's say all of a sudden I want to get short and I want to sell 230 by the 240. That's $10 wide. Collect 242, right? Instead of trying to get all of this, you try to get 50%, which gives you 82% chance of getting that. That is irregardless of what you see on the chart, right? You can get you have an 82% chance of keeping 50% of this, which means making 121 bucks out of this. So when you do that, you're not holding to targets, right? Unless you're trading like if you just bought shares, then you may be trading to targets, right? But when you trade to a percent of the option of the premium that you collect, then once you hit that, you could have hit it here, you could have hit it here because you also got time decay and you can collect profit that way as well. That's one of the things. That's why I say buying outright options, unless you scalping that day, is real hard to do. You get burned like that. I'm down in a triple Q position right now. Um, that I bought back in here, and I'm down about 500 bucks in that call, right? I have, let's see, 40 days on it. So I will continue to hold it just in case we get a rally, right? When I put it on, I was prepared to lose 100% of it. Now, if we get a big move, then I can make that back, right? But if not, then I will take that loss. So you just got to keep that in mind with that is the danger of buying options. Like and I've heard stories from, where I learned how to trade options. Like the guy was, for the most part, never buy them unless you scalping. Never buy them unless you scalping or buying like a leap. Like you do something like you would have come out maybe a year and buy a leap option out here somewhere, but they cost, so you paying in the thousands to buy like a, let's say you buy a 35 Delta, you're gonna pay about 20, let's say 2,500 for this. And that's just banking on over the next year that the NASDAQ will turn and continue to go up, which is which you'd be right for the most part. Maybe besides COVID. And I think COVID didn't last that long. It was a quick turnaround. So we just have to see, like right now with this market, what we got going on. Um, we do have a lot of news events coming up on, I think, Wednesday. Got some more inflation numbers and some consumer sentiment numbers on Wednesday and Thursday, which could add to that volatility. But one of the main reasons I think that if you look over on my watch list, everything is red besides bonds. Bonds are green, which is a positive for me. If the bonds were down as well, then I'd be sitting here thinking like, well, the market might be really crashing. But as long as you see the bonds are green, then I just think we're just getting a regular sell off. And another stock that's green on my watch list is GameStop. GameStop has earnings on Tuesday after the bell. That same setup that we seen in the VIX, similar over here. You see that? We got that in GameStop as well. Now, I'm not advocating like I don't care about the business model. I care nothing about that, right? I trade this setup. I don't care what the ticker symbol is. I got a low, a high, a higher low, and then a higher high. So that just signals, without knowing what the ticker symbol is, a reversal uh, pattern on a candlestick chart. So at that point, for me, I'm just looking to see what we're gonna get after that, right? You can see this dotted line right here where I bought in, bought a once I noticed it, I bought 100 shares here, and we're just gonna see what happened. Now, um, I'd like to see it take this high out. I kind of bought it prematurely. Generally, I will wait for it to take out this high right here and then complete my bull flag. And then I will put my levels off of here, 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 right? I got in early because I think that, honestly, if it makes its move, I don't think you're gonna get a chance to get in. GameStop, one of them stocks where it's like what they call it, a meme stock. And if you wait, you might be trying to get in up here. Where am I looking to to get out or take my loss? Probably down here below, we'll call it $20. So I'm willing to risk about $300 or so to try to make who knows what if we get a nice move. And once it takes out this high, I will reset these numbers. So basically, the what I'm going to be measuring is going to be like so. I'll show you guys what I'm looking for. So we'll delete that. So where my Fibonacci levels will start, it's going to be from this low, this high to here. And you can see it came down, hit the 618, and then turn. Once we take this high out, I will, or I could do it now just to show you guys how I count my levels here. Doesn't mean we're going to get them all. But with GameStop, I think as volatile as it is, you can get this all in one, literally like 1 or 2 days. And then and then here we go. Right. And that's what I'm looking at. So this week, I expect a lot of volatility. Some weeks you don't get it, but because GameStop has earnings, you'll get it. I think we'll get that volatility either to the upside or to the downside. It'll either be a dud, and I don't even think, to be honest with you, that it matters whether the earnings are good or bad. I just think that it showed up also on the hourly top equities and TastyTrade right back here, traded on Friday, traded 23.9 million shares. That's more, um, just put that in perspective. That's more than Microsoft. That's more than Meta. That's more than Coinbase. That's more than SMH. Like, that's crazy. That's up there with AMD. It's more than JP Morgan, more than Boeing, more than Netflix, more than MicroStrategy. So just to put that, I just want you guys to see where that's at. That's right up there behind Google. Google traded 37.9. It's more than Micron. Like I said, so it's up there. So the the volume is there and the volatility is there. And I'm gonna go also to the option chain. I want to show you guys something. Looking at options, I'm gonna go to the weekly option chain. What's crazy about this is the when you're looking at the deltas. So like a 16 delta is something that ordinarily, like, I would sell in a monthly. Like if I was selling a call, if I was gonna do, if I came out to the SPY, let's go to the SPY, and I came to, if I was gonna trade the SPY and I wanted to do a strangle, for me, I would do my strangle right around the 16 delta. Excuse me. I would trade it out here and I would trade the 16 delta right here. And you can see My pop is right around 68%. Probability of 50% of that is 93%. That's what I would sell because most of the time that's your one standard deviation, right? For the most part, it's your 16 on each side. That leaves you about uh, 16. Like if you look up one standard deviation, I want to say it's right around 68%, might be like 67.3% or something like that. So that's why I sell the 16 deltas on each side. If you come to GameStop and try to do that for just this week, you'd have to come out to 35. And then to the downside, you'd have to go to, you got a 15 delta, 18 and a half, right? Look at that. And that would be one standard deviation for like a one standard deviation move. So if we get something up to 35, it wouldn't be. Now the reason why it's not equidistance is, because I'm using deltas instead of um like a percent out of money. Cause so this has skew in it. When you use your deltas, it's gonna show you the skew in the option chain. So like from, let's call it $24, that's $11 up, but it's about 5.5 bucks down. So the option chain is skewing everything to the upside. So that lets you know we got a lot of buying pressure in here, and your risk is to the upside in this particular stock. All the risk is to the upside. So basically, you don't want to be short coming into this week. That's what the option chain is telling us, right? Doesn't mean that I'm right. Just means that some of the things that you can look at and be able to tell by the option chain, like which way the market is skewing the risk. And that's something that I noticed. So with that being said, and I think that in something like GameStop, the risk reward is okay. If you're fine with taking the risk right here, which I am, I don't actually believe that it'll go to zero, right? Worst case scenario, I could see myself losing 400 or 500 bucks. And I probably wouldn't even close it out. I just hold it until at some point you'll get a pop and be able to get your money back, or just start selling calls against it. And one of the reasons why I didn't do a cover call, because I really don't want to cap my upside in GameStop. So we'll just see. This is the trader in me, right? Trading. I'm not picking a stock with a great business model. I don't care nothing about that, to be honest with you. I'm trying to make some money. And so hopefully you guys got something out of this. If you did, hit the like button, share the video. Let me know what you think. Make comments in the comment section. With that, I'm going to be out, guys. Peace.